Hi guys, welcome back to my channel. My name is Sonia Ibel. Today we are going to be discussing different business structure and the Nigerian tax laws you should know about. Stay with me. Last time I talked about how to generate a great business idea. Now, if you've gotten a great business idea, you've established in your heart, or this is a business idea that I think I want to go with, that suits every criteria of a good business idea, then the next thing is to think about what legal business structure should I register the idea as. Now, we have different types of business structure, but the most popular ones are actually the sole proprietorship and limited liability company. So let's talk about sole proprietorship. Sole proprietorship is a business structure where the owner of a business registers this business and runs this business by himself alone. Yes, he can have one or two persons that he employs to do the business with him, maybe a sales representative or workers, but he and his business in the eyes of the law are one and the same because he registered it as a one-man business, a sole proprietorship. Right? The disadvantage of a sole proprietorship is that in case of litigation and business risk, because this person and the business is one and the same, the person bears the total risk that has to be associated with this business. Because in the eyes of the law, him and his business is one and the same. He can decide to register the business with a different name altogether, or even have a business account for the business. But still, in the eyes of the law, him and his business are one and the same. Now we have partnership. And in partnership, we have two types of partnership. We have the general partnership and we have limited partnership. General partnership is a business structure where two or more people come together and decide to form a partnership and open a business. Now, they share the risk just like a sole proprietor. They share the risk that is associated with the business or even the business litigation. So all the risks are shared within them because in the eyes of the law, they are actually more like a sole proprietorship, but now they are partners because they are more than one. So I will have an example of accounting firm and also that of a law firm. So they come together to form a firm and where they actually bear the responsibilities, the risks that is associated with running the business. We have limited partnership. In limited partnership, instead of two or all the people involved, just like in general partnership, bearing the risk of this business, we have people that might just come in as investors, so they are literally financial partners. They don't get to bear all the risks that is associated with running business. But then there must be a general partner in this partnership, in this limited partnership. And this general partner might probably be the owner of the business idea, but he needs to be competent enough to manage this business and all the risks that is associated with it, because he's going to be responsible for all the risks that is associated with this business and the litigation. So the other person or persons are only there to support him financially, but him as a person, being the general partner, is the one that has to bear the risk that is associated with this business. So he has to make sure that the business does not fail. And if there is any risk that comes up, he bears the risk. Now the fourth one we need to talk about is limited liability, LLC. Now limited liability is a business structure where the business is different from the business owner right now. So it's a business that the risk is limited to the business and not transferred to the owner of the business. It's flexible, but the only challenge about this business is that it has to be up and doing with the administrative part of the business, because there is administrative process that comes with you filing returns, with the tax organization and the corporate affairs commission corporation and the corporate affairs, right? So this is it about limited liability, but limited liability, we will discuss more about it when we are talking about the tax laws, because the challenge has been about people saying that, oh, limited liability, the tax is too much, you can't do that business, you can't really, if you're starting, you should start with just registering a business name. But we are going to discuss about the tax involvement in this business. Then the next one we need to talk about is limited by guarantee. Now, in this kind of business structure, this is mainly for NGOs, non-profitable organizations. So it's basically for NGOs where instead of in the place of limited liability, because in limited liability you have stakeholders and shareholders, but in limited by guarantee trust fund, in this case, what you need is guarantors, because remember that NGOs deal with non-profit organizations, which means that the business is not for profit, right? It's not where you do business of selling or trading, right? It's an organization where you probably raise funds to be able to boost that particular organization. And the people that you're going to be having are guarantors, because they are going to guarantee that the money that is going to be made out of this business are going to be used inside this organization and not for a personal profit. Now we have incorporated trustee. Okay, just the same way limited by guarantee is for non-profit organization, the same thing applies to incorporated trustee, where these people are the people that manages the funds that come into the organization and make sure that the monies are being used for the project, and the profit that is made out of this organization is being put back into that project. Now, so these are the type of business structures that we have. Now, before we move into the Nigerian tax laws we should know about, I want to mention 3 factors that you need to consider when and why choosing a business structure for your business. Number 1 is the longevity of the business. How long is this business going to run? Is it something you want to do from a particular time to a particular time? That means you probably might not be needing a limited liability to do that. You might want to go with a sole proprietorship or even a partnership. Yes. And another thing is the risk involved. Is it something that is high in risk? Because if it's something that is high in risk, you might want to go with a limited liability company and not expose yourself to so much risk in doing this business. Then the third thing is the ease of administration. Let's say, for instance, you want to establish a business that you're going to be having a lot of returns to file and maybe money to put into it. It might not be something you want to go for. A business name registration or a sole proprietorship. You might just want to go for a limited liability if the administration is much. But if it's something that you can run by yourself and have maybe 1 or 2 persons, it's like establishing a workshop where you know you're going to be doing more of with your talents. You don't need extra administration. You might want to go for business name registration. That's sole proprietorship. So these are the factors you need to consider. You need to consider how long is this business going to run for. Secondly, what are the risks involved in it? Is it something I can manage by myself? Is it something that I need to establish a body for it? And thirdly, what are the administrations I'm going to be looking out for? Am I going to be establishing a business I'm going to be running wide? Or is it something that 1 or 2 persons can be able to manage and still making money out of it? Now let's talk about the Nigerian tax laws you need to know about. Now in Nigerian tax laws, we have personal income tax and have a business income tax. Personal income tax, where you literally have to file your tax by yourself if you're doing a sole proprietorship, so you only have to file 1 tax. because remember, in the eyes of the law, you and your business are one. And in this filing of tax, currently you need to file from 7.5% down to 24% of your income based on your income. As a business, as a sole proprietor, you are actually entitled to pay only one tax, which is your individual income tax, as personal income tax. Now, the range of tax is ranging from 7% down to 24%. Okay. Now, there is what they call consolidation relief allowance, which is actually between the range of 20 to 21%. So, at the end of the day, the maximum tax an individual or a sole proprietor might have to pay might be at the level of 18-point-something%. But as a business, there are different tax you need to pay, which include VAT, that's value added tax. What is value added tax? Value added tax is 7.5% tax that is added on any goods sold. So let's say, for instance, you are preparing an invoice to sell some goods to somebody. So let's say the goods is sold at 1,000 naira. So the normal price of the goods is 1,000 naira. Then you need to add your VAT, that's your VAT, on top of that 1,000 naira goods. So that's putting in the 7.5%. And that 7.5% you're going to remit to the government, right? So that is for VAT. As a limited liability company, you pay your business tax different from your personal tax. So if you're running a limited liability, you actually entitled to pay two taxes: your personal tax, your personal income tax, and your business income tax, right? While sole proprietorship, you're only entitled to pay just one tax, which is your business. Remember, your business and you are one and the same. So you're only entitled to filing a personal income tax. Now let's talk about withholding tax. Withholding tax is a deduction from a supplier or a contractor. Let's say, for instance, you do a business and you have a supplier that works with you, that supplies you maybe the materials you use or supply you goods. Now, there's a deduction tax you need to deduct from their money. It ranges from 2.5% down to 10%, depending. And in this case, if the supplier is an individual or a sole proprietor, that means you need to remit the withholding tax to the state internal revenue. But if it's a limited liability company, that means you need to remit it to the federal inland revenue. That is how it works for withholding tax. You must have heard that and you probably don't know what that means. I hope you've gotten a little idea and the difference between limited liability and sole proprietorship, so that when you make up your mind on what you want to go for, you could actually know where to fall back to. Thank you so much for watching this video. I will see you in my next video. Bye.